Hi, and welcome to my September update on my portfolio. And the header says it all, it has been a crazy month. The key standouts here is what has been happening with Greggs. Greggs has been a roller coaster ride, if you excuse the pun. And I've got a separate video on that, which I will put in the comments. Pets at Home had a really big month where they sent out a second profit warning only 2 months after that last profit warning, making Pets at Home CEO position unattainable, and they exited. Luckily, it's making a slow comeback, and I had to average down quite significantly to get that into a decent position. SoFi is a new investment, and Starbucks had an interesting position where I bought and sold part of it as well, just to make sure I had the right level per stock. But let's go into it. Before I do go into it, there is about 1 week left. So Monday, the 6th of October, this campaign that Trading 212 is running for Get a Free Share is underway. Had one person take it up. I got £10 of an Alphabet share, and they managed to snag £70 of a Meta share. So they got a really good gig. I think if you take it up, you get a much better outcome than the person receiving. But it's there. You don't have to do it. It's all down to your good sales. I'll just put it in the link in case you're interested. Right, let's move on. If you look at the profit and loss, and this is unrealised profit and loss, just below the investment line, so the last line at the bottom, you can see my monthly performance at the end of each month wasn't exactly great. So a £5 loss in June, just about break even in July, and a £2 loss in August, which is why my portfolio was underwater if you look at the previous video I did. Now it's gone from a £2 loss to a £126 profit. So that is a significant change. And the only difference is, yes, the investment's gone up by £500, but there's been some real things that have really turned the dial. And I'll show you that in a waterfall in just a moment. If you look at my September movements to August, Invesco change, the month-on-month change between September and August is just an increase in the share value. Vanguard was actually, I bought 2 additional shares, and each one is £40. So the difference there is pretty much the new shares plus a slight uplift in the share price. Greggs, I did buy an additional 10 shares from the top of my head, just to average down my cost from something like 16.44 to 16.30. Pets at Home, you can see a big increase, and that is predominantly because the share price went down from about £2.30 all the way down to about £1.70. I think I got in and at different price levels. So I've bought my average down from £2.24 to just under £2. So I'm really pleased with that. I think Pets at Home at £2 is a really good value. Land Securities is an increase in the share price. Aviva is because I bought an extra share. Taylor Wimpey is an increase in share price. Lloyds Bank is a new one, so I've gone in with a small position in Lloyds Bank. Starbucks is a new one, and everything below that is new. And you can see Alphabet is the free share I got, so that's good. So Visa is, I bought half a share, so that would have been half of about $360, and sold it. So I made a very small profit, and I'll show you that in a moment too. So that's where we're at. So that's a really good stonking outcome in what is its 4th month. So that's more what I want to see. So that's put my mind at ease, because you look at it and you kind of get worried when you sort of, everyone else is saying they're getting a good result and you're not. So this is a good turning for my portfolio. So this is just my waterfall showing, excluding any fees, what's going on for each one. So you can see my ETFs are absolutely brilliant. So I really must need to put more into the ETF. So I'm sort of got too much in Pets at Home, definitely too much in Greggs. I need to trim those positions and invest more into not individual shares but into the ETFs. So my ETFs, Invesco and Vanguard, brilliant. Pets at Home, due to the fact I averaged down and the share price has recovered to over £2, I'm actually in profit, which is such good news, because if I hadn't done anything, it would have shown a much worse position, and it was heavily in the red until I took action. Greggs, this is the best position I think it's been in all month. It was about £70 in the red, so it pulling back down to 20 is good. I think this will turn green in due course. I've done another video, like I said, on this one, and I'll put it in the link in the comments. But I've got confidence Greggs will turn around, and I think that will be a good profit. And once I get a decent profit, I'll trim the position. You can see, if I don't zoom out too much, you can see TW's Taylor Wimpey. That's in a decent place, and I get a nice dividend because I am into the dividends. I do want to see the dividends grow. I've only had one so far this year, but I'll do a dividend update with my targets in a video next month. I won't go through each one of these, but you can see as you go along the realised profit of £6.90. This is a combination of selling 4 Starbucks shares and selling half a share in Visa. So that's my realised profit. But the other thing I just want to call out is fees, and these are exchange rate fees and stamp duty fees on UK shares. They are they are what could many see as a hidden cost in all this. I keep a good track on it. I see where it's coming in at. I want the interest and realised profit to offset that, and you can see at the moment it's sort of there or thereabouts. It's about 20 odd p short. So you've got to keep an eye on the fees to make sure that you're not in effect deteriorating your portfolio, and over time as it stabilises it'll become less of a factor on this one as hopefully the dividends come through. And you can see I've only had one there at £4.82, which was Vanguard. So here are my sales for the month. These are the first sales I've ever did on this account. As you can see on the portfolio, it's only 4 months old, but I have trimmed where I thought it's best just to take a profit, because the reason I had them didn't stand. So Visa, I was quite happy to take a £1 profit. Doesn't sound a lot, but that's still £1 back into the account. And Starbucks, I'm quite happy with a £5 profit from the shares. I wanted more than £1 a share, to be honest, and I'm quite happy. I didn't want to have a big position in Starbucks, so the reason I ended up with 9 shares at the time is because I was averaging down as the share price was dropping, and as it came back up, it went enough up on my average position that even given I only bought additional shares to average down, there was no need to keep those shares as the share price went above my average. So I trimmed the position, and I'm quite happy with that. So that's a good, strong position. And I'll just leave you with this one. This is me tracking it by week, so you can see the investments. The reason it jumps is because I've got some small investments. I think I've only got a couple left now, and they are small money. I'm trying to put it all into here. The aim is to get this to go along, and I think for this year I'd like to finish the position. OG is just my original investment. I'd quite like to finish with £6,000. I'm not sure if I'll get there because I'm not sure how much I can add between now and December, but £6,000 with sort of average £500 a month is a really good outcome, putting this aside and getting this portfolio to grow. But what you can notice is the last time I did a portfolio update, I was £2 underwater. You can see the big turn that's happened since the 31st of August. So we've had some nice growth, especially in the last couple of weeks. And, the week's just gone with a growth of, 79.58. It's a great week. Whether it's still going to be there this time next month could be challenging depending on what happens in the wider stock market, but for here and now it's just nice to hold a position where it's 2.3% returns thus far, which is only in 4 months, so it's not an annualized number at all. So this is a very, very strong position. I'm happy. I'll be looking to add some shares from the small amount of cash I've got back, and I hold about £1,000 in cash, just so when shares come lower in value, I take full advantage. I have a target of, X amount per company, and if it hits that, I go in, and if it doesn't, I don't budge. I keep the cash there for when the stocks come down, so I can take advantage. So that's where we end. I hope you enjoyed it. I hope you like the quick blast through. And next month, I'll probably split the videos. One, just giving an update, and probably just doing a show from Trading 212 directly, so you can see see for yourself what's in the portfolio. And I'll also do a dividends, because I'm expecting 3, which is super exciting, because the dividends is predominantly the reason I do it, to keep myself motivated. So hope that was interest. Please help me out and give me a like or subscribe. Any comments would be appreciated, and happy investing.